Hello and welcome. Here at Pro Tax Accountant, we're going to talk about a number that causes a ton of confusion for UK businesses, £250. Now, it sounds pretty simple, right? But in the world of tax, that one figure can unlock several completely different doors. And you know what? Getting it wrong can be surprisingly expensive. So let's untangle this maze together.
So, picture this. You want to give a gift. Maybe it's a thank you to a client, a little bonus for an employee, or even just a present for a family member. You remember hearing something about a £250 tax-free limit. But which one? Is that for your business, or is it a personal thing? Are we talking about income tax, or is it inheritance tax? This right here is exactly where the confusion kicks in. And today, we are going to make it absolutely crystal clear.
Okay, let's start with the one most people have probably heard about, which lives in the world of personal tax. We're talking about inheritance tax, or IHT, and a really handy little rule called the small gifts exemption.
Now, here's where the real power of this rule is. Under the inheritance tax law, you can give up to £250 to as many different people as you like every single tax year. So let's say you give it to 10 people. Well, that's £2,500 you've gifted, completely free of IHT, and it's immediately outside your estate. The key thing to remember, as you can see, is that it's a per-recipient allowance.
But, and this is a really big but, this exemption has a pretty brutal all-or-nothing rule. If you give someone exactly £250, fantastic, the whole amount is exempt. But if you give them just one single penny more, £250.01, the entire £250 exemption is lost for that person. The whole gift then becomes a chargeable transfer. It's a true cliff edge.
And the restrictions don't stop there. This is crucial. You can't combine this £250 allowance with other major exemptions for the same person. So for example, you can't give your child £3,250 and then try to claim both the $3,000 annual exemption and this £250 small gift exemption. For that one person, you have to pick one or the other. And remember, this allowance resets every tax year. If you don't use it, you lose it.
So why does getting this wrong matter so much? Well, because a gift that you thought was instantly tax-free could suddenly be reclassified as a potentially exempt transfer, or a PET for short. This means it's only truly tax-free if you live for 7 years after making the gift. You've basically, without meaning to, started a 7-year clock ticking on your estate, all because of a small mix-up.
Okay, so that's the personal tax side of things. But that £250 figure also pops up for businesses. And this is where the maze gets really tricky, because the rules and the type of tax we're talking about are completely different.
And there it is again. In the business world, one of the main places we see £250 is as the tax-free limit for gifts an employee can get from a third party. And it's so important we stress third party. This means it comes from someone other than their direct employer, maybe a major client or a supplier sending a thank you hamper.
But just like that personal rule, this one has some very strict conditions. The gift can't be cash. The employer can't have been the one to arrange it. It can't be a reward for just doing their job. And take a look at that last point. Sound familiar? If the total value of gifts from that one third party in a single year goes over £250, the employer is taxed on the full amount, not just a bit over the top. It's another cliff edge.
And just to show you how often this number comes up, there's another £250 rule in a completely different area, VAT. For any supply of goods or services that totals £250 or less, a business can issue a simplified VAT invoice which just needs less detail. It's purely for admin, but it really shows how the same number appears for totally unrelated reasons.
So let's just put them side by side to really nail this down. The personal IHT rule on the left, that's all about the donor's estate planning. The business gift rule on the right, that's all about the employee's income tax. See? It's the same number, £250, but it's a completely different tax, a different purpose, and a different person getting assessed.
You know, to really show why context is king, let's just quickly throw a couple of other numbers into the mix. What about a gift directly from an employer to an employee? Say you're an SME director and you want to give a staff member a bottle of wine for their birthday. Well, that's not a £250 rule. That falls under something called trivial benefits, and the limit there is just £50 per gift.
And what about a gift to a client? Maybe you're a contractor and want to say thank you after a big project. Well, again, it's a $50 limit for it to be a tax-deductible expense for your business. On top of that, it has to have your branding on it, and it absolutely cannot be food, alcohol, or tobacco.
And finally, what about the annual staff party? A classic for established companies and startups alike. The tax-free limit for that is £150 per head.
And guess what? If you go a penny over, the entire amount becomes a taxable benefit for every employee who came. You can see the pattern here. These limits are strict, and they often have that nasty all-or-nothing sting in the tail.
So let's be perfectly clear. Whether you see a number like 50 pounds, 150 pounds, or 250 pounds, you just can't assume you know the rule. The context, who is giving, who is receiving, and why they're giving it, changes absolutely everything. This is the heart of the gifting maze.
Okay, so with all this complexity, how do you get from a state of confusion to one of real control and compliance? Well, it all comes down to one simple, non-negotiable principle: documentation. And that's not just us saying that. It's the absolute cornerstone of good tax practice. Your records are your defense, they're your proof, and they're your peace of mind. Without them, you're just relying on memory. And I can tell you now, HMRC does not accept memory as evidence.
Let's make this really tangible. This is a little snapshot of HMRC's Form IHT 403. After a person passes away, their executors are legally required to fill this out, detailing every single gift made in the 7 years before they died. Just think about that. They have to try and piece together 7 years of financial history.
Because the burden of proof isn't on HMRC to prove you made a gift, it's on your estate's executors to prove a payment wasn't a chargeable gift. They are legally forced to go through 7 years of bank statements, and if they can't explain a payment, HMRC will just assume it's a taxable transfer.
So, what does good record keeping actually look like? It's really simple, and it's something you should do at the time you make the gift. Just record the date, who you gave it to, what it was, and how much it was worth, and, this is the crucial bit, which tax exemption you believe you're using. This simple little log can save your loved ones a huge amount of stress and potentially thousands of pounds.
Look, navigating this maze on your own can be pretty daunting. The rules are nuanced, the stakes are high, and the whole landscape can change. That's why getting professional guidance isn't really a luxury, it's a strategic necessity.
So, if you only remember 3 things from today, make it these. First, the number £250 is not a magic key. It unlocks different doors in IHT, income tax, and VAT. Second, always be aware of those cliff edge rules and the strict bans on combining allowances. And third, your best tool for compliance and control is a simple, clear, up-to-date record of every gift you make.
Now, of course, we have to state that this explainer is for general information. Tax law is incredibly complex, and of course, your specific circumstances are unique. So for advice that's tailored to your situation, you really must consult with a qualified professional.
If you're ready to get some clarity and take control of your tax planning, please get in touch with us here at Pro Tax Accountant. You can reach us by phone or by email. And for more explainers just like this one, make sure you subscribe to our channel. Thanks so much for watching.